Hey everybody. So it could be fun to definitely watch what the stock market's doing on a daily basis over the next week when it's hitting a new record high, et cetera, et cetera. But we're long-term investors. We want stocks that we can hold and just put in our portfolio and be reasonably confident that in 10, 20 years from now it'll be worth a whole lot more than it is today. So we're going to talk about two stocks that we feel are in that category. Tyler is joining me. Before we do, please take a minute and click subscribe to the channel and take a look at the link you see on your screen for a message from my sponsor, The Motley Fool. It's the best way you can support this work we're doing, and you can get the top 10 stocks to buy right now. So I'll kick it over to Tyler first. Tyler, what is one stock that you just think you can buy and just hold for decades at a time?
Yeah, so this is a little bit different than the normal chords I sort of strike when I'm on here. I'm going to talk about Arthur J. Gallagher and Company. Um, may or may not have heard of it, but they are an insurance broker. And specifically, when you hear insurance broker, you go like, oh, well, auto insurance, home insurance. That's not what they do. Their primary clients are businesses, governments, municipalities, education system, uh, like schools, things like that, looking for specialty insurance or how to insure unique things that may or may not be covered by kind of standard coverage. And so think of it this way is as the broker, they don't actually underwrite any of these insurance contracts. And because they're unique, what they do is they, meet with their prospective clients and kind of go out to underwriters like Berkshire Hathaway Reinsurance, Markel, and other specialty and reinsurance companies and get bids on the ones that want to underwrite these. And then Arthur J. Gallagher, as the broker, gets a commission based on the size of the insurance premium that is being written or the size of the contract. It is, you know, it doesn't sound like it's the most durable business, but look, as long as we need to insure things for collateral or unforeseen reasons, which let's face it, it's probably something that's going to go for a long time. I think insurance in some form or another has been around for well over 1,000 years, probably going to last that long too. And so you have a business that at least fundamentally isn't going anywhere. What makes Arthur J. Gallagher unique, in my opinion, is it's one of those businesses that, unlike so many other businesses that are awful at you know, uh, doing mergers and acquisitions to grow shareholder value, Arthur J. Gallagher is one of the very, very rare businesses that's actually able to do it. And the reason that they're able to do it is rather than go out and try to buy like big companies or try to, develop synergies by having their, buying a specialty or reinsurance company, what they do is they make small bolt-on acquisitions of mom and pop shops like your local insurance broker that on Main Street or that may or have like three or four offices or something like that. It's very, very like small acquisitions that just kind of build up over time, and they're small enough where you can bring the business into your systems, integrate them quickly and easily with only a few employees. You're not having like a bunch of corporate culture debates or execution and integration issues that plague so many companies that try to do mergers and acquisitions this way. And so in doing so, it's a business that has, grown its, it's grown its book value per share by almost three times over the past 10 years. It's gone from little about $19 per share to over $50 per share in terms of book value. And doesn't pay a big dividend. I think it's 0.95% right now, so nothing to really write home about. And for all the companies I think I've ever talked about with you, this is by far the most expensive. It currently has a trailing PE or price to earnings ratio of 52 times, which by any definition is extremely expensive. But if you're looking for a business that's probably going to last for a very, very long time and has a very good track record over more than 40 years of growing the business incredibly well, generating high returns, and is a durable industry that's going to last for a very long time, Arthur J. Gallagher could be a very interesting company to consider.
That is an interesting one. I'm going to talk about one that is just my go-to stock for buying and holding for decades. If I want a forever stock, this is the one I buy. It is Realty Income, the first dividend stock I ever bought, the first real estate stock I ever bought. I've owned it for well over a decade with very good long-term results, even though the ups and downs of the in-between time have been, kind of stressful at times. It's significantly down from its all-time high right now. I believe it's still about 25% off the highs, mostly because of interest rates. Real estate stocks are very interest rate sensitive. Um, right now, Realty Income, it is a 5.5% yielding stock. It's one of the rare companies that pays monthly. A lot of people, fun fact, don't know this. It actually has a copyright on the phrase "the monthly dividend company." Realty Income has a little over 13,000 properties, and the majority of them are in the retail industry. Now, a lot of investors are understandably hesitant to get involved in anything involving brick and mortar retail, but it's the kind of retail that they specialize in. They generally buy properties, first of all, with a tenant already in place. And it chooses the tenants that are in businesses that are, one, recession resistant, and two, resistant to e-commerce headwinds. You don't want a business that could easily be undercut by Amazon and go away in 10 years. So it owns things like service-based businesses, think like fitness centers, things like that have no e-commerce disruption at all. It owns businesses that sell non-discretionary products. Walgreens and CVS are both top tenants of Realty Income. Things that if I need a prescription at the pharmacy, I'm going to go there. If I need something quick, I'm going to go to the CVS in the corner. I was there 2 hours before we recorded this, to buy something. Um, very resilient business. And then third, they own a lot of businesses of a discounted nature. Think like BJ's Wholesale Club is a tenant of theirs. Family Dollar is a big tenant of theirs. So there's a lot of, not only do those businesses do well in recessions, but they tend to do even better as people need to kind of cut back and find ways to save money. So don't be worried about the retail aspect of it. They are starting to diversify significantly away from retail in a lot of interesting ways right now. They recently got into the gaming real estate business. They acquired a big casino property up near Boston. They're now getting into the data center business, which is really interesting. They're partnering with Digital Realty, where they build a property and Digital Realty kind of manages it and finds tenants and things like that. I like that partnership there, because it's the best way to get into the data center space is to partner with a leader like that. Um, they've been a great stock over the long term. I mentioned great total returns in my portfolio. I haven't owned it quite since their IPO in 1994. I would have been in middle school at that time. But since 1994, even with the recent 25% drop from the highs, it's delivered a little over 13% total returns on an annualized basis over the long run, well ahead of the S&P 500. If you're an income investor, it has increased its dividend 123 times since it went public with no cuts whatsoever. And that includes a couple of pretty trying times for commercial real estate, especially the financial crisis. I think real estate is a very interest rate sensitive sector. And I think Realty Income, it will be a big winner as rates start to fall, just because price and yield have an inverse relationship. As the yields investors expect from their investments start to decline, price should have some nice upward pressure on it as well. So it's one that I've been buying, for well over a decade now, and I don't plan to stop that anytime soon. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.